All right, guys, today's lesson is very, very simple. What we're going to go over is how to read a stock chart or a candlestick chart. This is pretty beginner. So if you want to skip this, be free to. I don't really care. If not, honestly, it's a good refresher regardless. I want you to just know how to read a candlestick chart from start to finish. That way, market structure and candle analysis will start to be a little bit easier for you, right? So first things first, there's three main charts that people use. It's going to be bar chart, line chart, and candlestick chart. Today, we're going to go over the candlestick chart and how to use that chart successfully and how to know specifically what the candle looks like, what it's doing, why it's doing it. The most common chart used, it's the easiest chart style to make a strategy with. It shows you the open, the high, the low, and the close values. So to read a candlestick chart, the most important thing you need to know is the upper and lower shadows. That basically means the high and the low, the open and the close. And so what that looks like is this. So for a bullish candle, what we're going to see, and bullish means upside, right? So upside candle. What we're going to see is four values: the high, the low, the open, and the close. And so when we see a candle that looks like this, right? And we're going to fill this all in, fill it in. Just imagine this is completely filled in, right? What you're going to see here is you're going to see these little areas: up, down, and you're going to see these lines right here. Boom, like that. That is essentially those four areas that we talked about, right? And so what this looks like is we're going to have on a bullish candle, we're going to see an open starting from here, right? Because a bullish candle will open up and you're going to see price action happen inside of that candle. So let's say that this is a 5-minute candle per se, right? A 5-minute candle. In 5 minutes, here's what this candle managed to do. It managed to come all the way up and create this high. This right here is going to be your high. It managed to come all the way down and create this low. This is going to be your low. And it eventually ended up closing at this price right here. So you've got your high, you've got your close, you've got your open, and your low, right? And so when you see candles like this, let's look at here, for example. This is a live example too, since we're in the market's open right now. You can see that based on this candle previous, we have our high, we have our low, we have where the candle opened, and we have where the candle closes here, okay? So when I refer to entering positions, typically I like to enter positions when we break highs or lows. I'm not gonna use the candle bodies themselves. I wanna see the candle high and lows be broken because that's the most important thing that we need to pay attention to is the high and low. So there's your high, there's your low, there's your open, and there's your close. That's for a bullish candle. Now, for a bearish candle, it's actually gonna look slightly different. So what we're gonna see here is a high being created. It's the same thing. A high and a low being created on every candle. Okay? High and a low is created on every single candle. All right? Now, what's going to happen is we're also going to have the open and the close on this candle too. But what you're going to notice is that it's actually going to be different than the bullish. And the reason why is because it moves to the downside, right? So the close of a bearish candle is actually going to be the downside push. So here is where we end up closing on this candle. And here is where we end up opening on this candle. And what tends to happen is, right, if we look at it from a perspective like this, for example, let's say we had a bullish candle that was going into a bearish candle, let's say up here. Well, we had ourselves our close. Okay, so we closed here and we opened here. All right, so we usually open and close on opposite ends for a bullish and bearish candle. Now, just for some more terminology, these areas right here where we have this big line. So let's say the stock opened up right here, came all the way up here to this high, came all the way back down and closed here. This right here is going to be referred to as a wick, okay? So this is where we create a high, a big high up here. This is the wick of a candle, right? Think about an actual candle, right? In the candle, you're going to see that piece inside the candle is called your wick. So it's the exact same as these candles. They have wicks as well. So you're going to use the open, close, high, and low of your candles to make decisions based on the market, make decisions based on what they think the market's going to do next, okay? And so what we're going to see here is going to be the doji and your body, of course. When I refer to body, what I'm referring to is this part. So we have your wick and your body, okay? Here's your wick, here's your body, and here's another wick, right? Now, a doji candle is actually a specific type of candle. And what it is going to be a candle that has a high and a low, but typically what tends to happen is we close and open at the same spot. That is then going to look like a cross just like that. So you're going to see these doji candles pretty often, and what these means are they are typically signs of reversals. Whatever direction we're headed, if you see a doji, we're most likely going to use that as an idea of a reversal. But there's more to it, right? There's more to understanding what these candles are and why they happen, which is probably where you're stuck at. You see these candles, you see a doji, you see a pattern, but you're like, okay, cool, I'm going to enter. But then when it goes against you, you don't know why these things are happening, right? So let me explain a little bit as to what this candle structure really means, right? We have a candle that's like this. We know that this candle here is bullish, but this next candle that's here has a large candle wick. What does this indicate? I want you to answer that question in your head. 3, 2, 1. It indicates selling pressure, right? This indicates seller pressure because sellers made this thing come all the way from up here to all the way back down. And so when you start to see these dojis, what we need to pay attention to is not just, oh, we're seeing a doji. What we need to see is the overall candle and what's happening because of selling pressure and buying pressure, okay? There's two people in the stock market. There's buyers and there's sellers. That's it. And so when we see candles, we can start to see basically what's happening on those candles and seeing exactly why we know that the candle's most likely going to go one way or the other. So for example, here you start to see we have a long wick to one side, a long selling pressure wick. Let's say we came up to that, right? A long selling pressure wick with a small body, a doji, and a small buying wick, which means what does this mean? Sellers have the most pressure here, right? It's a battle between pressure of the buyers and sellers. And so these candles are going to give you a very, very strong understanding of, hey, what's happening at these levels? Is it going to be a strong buyer, strong seller? And later on, we're going to actually talk about the stories that these candles are going to tell you and how you can use that to your advantage when trading and when using, when taking positions, okay? So that's the overall understanding of what a candle looks like. Now, if we just look at it here, I'll show you the actual stock chart itself, right? So taking a look here, we've got ourselves a high and a low. Let me show you this candle instead. A high and a low, an open, and a close. We open here, we close here. We then open on this candle. We have literally zero wick from here, maybe a tiny little wick here. And then we push all the way up and we have a very, very large body. What does a large body mean? Well, a large candle body means that there's strong pressure in that direction. Whatever pressure there is, if it's bullish or bearish, this large body right here indicates, hey, we've got a lot of pressure in that direction. Now, when you start to see failures, you're going to start to see, hey, we're not continuing in that direction anymore. Why is that? Well, look, these large wicks are showing you selling pressure, right? So the wicks are going to be very important. And when we start to, actually go over candle analysis, you're going to start to see how this is really like how we really use these candles and see what's going on within the trend and within the trade to know what's going on. So high, low, open, close, open, close, and there's your low. We then open again here and we close here. There's your low, there's your high, right? So we want to make sure we know every single part of a candle anatomy and candle structure before we start going in and trading, finding strategies, finding indicators, all this stuff. It's not necessarily necessary because what we need to have is an understanding of what's actually happening. I want to break down all your bad habits and teach you all the new habits that will teach you literally everything you need to know to actually go forward. Sounds good? Sounds good.